Hey folks, there's a lot of volatility happening in the stock market right now. Really big swings up, really big swings down. A lot of people are very confused. What should you expect in the market? Listen, this is not unknown. We kind of knew this was going to happen. Maybe you don't know how to trade it yet though, so I'm going to talk to you a little bit about that in this video. What to do with all this market volatility. Here we go. Hello, everybody. It is Jeremy Whaley here from Trade Maestro. Hope you guys are all doing fantastic. And I know the market volatility lately has been a little bit intense, kind of scary to some people, but I'm hopefully going to give you some ideas of what to expect coming up. So if you've been watching my market update videos, you know I've been really bearish in the market since last November. We've had pretty much nothing but bearish forecasts with a few bounces along the way here. But there's something else I've been talking about, and I've been relating this entire bear move of 2022 to the year 2008 and the so-called financial crisis or market crash of 2008. There's a ton of parallels. I did another video earlier this week on that, and I'll try to remember to link that up at the end as well. But there's something in there that a lot of people really ignore, and then when it happens, it surprises them, and that issue is volatility. So I want to talk to you about volatility in this video and how you can expect it, how you can anticipate it a little bit, and maybe how you can even make some money trading it. So let's come in here to the charts and let's see what we've got going on here. First thing I want to do is just kind of orient you. You're looking here at the Dow Jones Industrial Average, current time here. We just finished the week up. And I want to draw your attention to these most recent candles. In fact, I'm going to get rid of the moving averages so we have nothing to cloud our view. And I want to show you what I'm seeing here. So this past week, between a couple of these trading sessions, we had about 1,500 points of market gain just on Monday and Tuesday. My drawing pen has gotten messed up. Do I want to move to this screen? Yes, I do. There we go. We've had about 1,500 points just on Monday and Tuesday right here. Okay, those two trading sessions. And then we had on Thursday and Friday, more than half of that was given back. Now, what is that? The word is called volatility. Volatility. This is a special way of saying the market's crazy. It's out of control. That's what it really is. But when you have these kind of big swings, it freaks people out because they see a 400, 500, 800 point day in the market. They're like, oh, it's a huge day. And it might be a big day. But when you zoom out, when you really get a perspective of where you are in this trend, you look at those candles, you're like, they don't look that big. Yeah, they really don't look that big at all. And in the future, when we come back and we look at this time period in history, you're not going to be analyzing this and saying, oh, that was 1,500 points in 2 days. It was huge. Everybody was freaked out. Nobody's going to say that. You're just going to look at it and say there's a blip on the chart. That's it. Okay? Well, I want you to recognize that throughout this year, we've had many of these blips on the chart. We've had several big days. I'll come back in here, and I'm just going to kind of draw your attention to a few. This one right here that I just drew my arrow to, that was over 1,000 points in one trading session. Here, that was about 1,276 points in one trading session. This one right here was another 522 points in one trading session. If I can get my arrow in there. There we go. So you had a 1,000 point day, a 1,200 point day, a 500 point day. How crazy is 1,500 points in 2 days and 600 points in one day, 400 or 500 points another day? How crazy is that? And the answer is not very crazy for the times, okay? In fact, it's very much expected for the times, and this is something that I've anticipated. In fact, I've been so bold as to tell my students in my Profit Picks classes on Sunday nights, I've been so bold as to say we will probably see 1,500 and 2,000 point days where the market's selling off 1,500 to 2,000 points, maybe as much as 3,000 points in a day. And then I've said to them all year, don't be surprised if the next day or two or the next 3 or 4 sessions, everything retraces, it goes right back up to 3,000 points. And then watch, it'll just keep going in that same way. That's what we've seen happen this week. We saw last week a very, very bearish week. And then this past week, we saw 1,500 points in the first 2 days of the week. And then we've given most of it back by the end of the week. That's market volatility. Let me show you why I would say some of that. I want to take you in a little time machine here. I've just changed the chart. We're now looking at the Dow Jones Industrial Average in 2008. And this is the time period that I believe we're in. I've done some other videos on this. I think we were about, in this model, I think we were about right here, roughly. Okay, so in other words, I think we're about to experience that. Woohoo! Isn't that going to be fun? All right, what I want to draw your attention to in here are all these red candles that look pretty benign when you first glance at them. Okay, but I'm going to draw your attention to some of them. This one right here where my cursor is, I'll try to put an arrow here. I can't do cursor and arrow at the same time, so I have to switch back and forth. That was a 504-point day. Now, 504 points may not seem like a lot to you, but that represented 4% in one trading session. 4% to the downside in one trading session. Understand, on an 11,000-point index, that translates to today's index, which is 30,000. That translates to about 1,500 points. So in today's market, with today's market prices, if we had seen that 504-point day, it would translate to 1,500 points in one day, 4% in one day. That was a big one, right? Well, let's look and see what else happened in 2008. 2 days later, we had another big one. Right there. That was another 449 points in one trading session. Okay, translated to today's numbers, that's about 1,300, 1,350 in one day. And then watch what happened the next trading session. You see this green candle? In one session, it was back up 410, followed by the next day, 368. Followed by the next trading session right here, 372. Now those numbers today, they seem a little bit benign. They don't seem that big. But again, you got to superimpose this. We're on a 30,000 point index today. Okay, this was an 11,000 point at the time in 2008. So you got to multiply this by 3. The equivalent of these, to get these 3 and 4% moves in one day, means that a 500-point day today would be worth 1,500 points. Okay, 450 points back then would be worth about 1,500 points today. So you had the equivalent of 1,500 down, followed by another 1,500 down, followed by a little over 1,200 up, and then another 1,200 up. That's 3,000 in today's terms. That's 3,000 points in 2 or 3 days, followed by another 372 down, which in today's terms would be almost 1,200 down. You see what I'm talking about? That's the kind of volatility that was taking place in 2008, and that's what we're gearing up for right now. I think we're about to hit it. Let me go through the rest of this because this is really important for setting you up for what to expect over the next couple of weeks in the market. Continuing through here, take a look at this big red candle right there. You see that one? It looks pretty benign in history, right? Nope, not at the time. That was 777 points that represented 6.98% in one day. Okay? In today's trading terms, into the prices of today's market, that would be the equivalent of over 2,100 points in one trading session to the downside. You think, oh, that's horrible. It was such a scary time. And then you realize that the very next trading day, this green candle, while it didn't retrace all of it, it was still up 500 points. It was up almost 5% in one trading session. Up. Again, let me translate this. In today's terms, that's the equivalent of being down one day 2,100, 2,200 points, up the next day 1,500. That's the equivalent of what you're seeing. And then over the next week or so, as you see the big red routing that took place here, we just had several of these days. It was 500, 300, 400, just keep counting them up. And then you got to the really big ones. And I want to draw your attention to this, okay? Look at this really big enormous. Red candle right here that I'm putting my cursor on, just drew the arrow to it. That was 678 points in one day, over 7%, because we were so cheap at that point, 7.3%. Okay? In one trading session. And then this next one here, it looks like nothing happened. It looked like it was, we call it a spinning top. It was a very small day. But the intraday movement on that was 89.78. It's about almost 1,100 points in one trading session. Intraday, that was between top and bottom. And then here's the crazy one. The very next session, how much were we up? In one day, 930 points to the upside. Okay? I think this is what's coming, folks. I really do. I think it could be here next week. I don't know when it's going to hit. Put that in perspective. In 1 week, we gave up about 3,000 points in the Dow. Today's terms, that's the equivalent of 9,000 points in 1 week, based on today's Dow valuations. In one day, coming into the bottom of this swing, in one day, we had a single day move of 678 to the downside. That is the equivalent today of almost 2,000 in one day. The next day, we had intraday volatility of 1,100. That's equivalent to 3,300 today. And the next day, we were 930 up, which is the equivalent of 3,000 up. All of that volatility in 1 week. Mind blown, right? Crazy. Why is this relevant? It's relevant because this is what's coming. I had a lot of people last week. They were very bearish. They were in bearish trades. They loved watching the bear market last week. And then this week we bounced and we're up 1,500 points and they're freaking out. Well, I told them, I told you, be prepared for a lot of volatility. That means you're going to have to loosen your stops. If you're trading these bear markets, you're going to have to make a looser stop. You can't trail it at 5 points. You can't trail it super tight. I'm being exaggerating here, but you've got to give that thing room to move so that the volatility, the natural ebb and flow of the market has rooms to move and you're not getting yourself stopped out. It's going to feel like you're taking a huge risk because you have to have a wide stop. That's just the nature of it. In a very volatile market like this, you probably don't want to be selling options because implied volatility is going higher, which means it's going to be really hard to make money on the options sell. You need to be buying options while the big move is happening. And then on the other side, when the volatility is coming out, that's when you're going to want to sell the options. Okay. And the other piece here to be aware of is while you might see 1,000, 1,500, 2,000 points one direction or the other, just hang on for a day or two. It's like Will Rogers always said, if you don't like it, just hang on a couple of days and it will change, right? Said that about the weather in Oklahoma. I want to come in here and show you something else that's happening. And I want to show you a couple of pieces of this. The first thing I'm going to do, I'm going to flip over, and this was your Dow chart, by the way. Okay. I'm going to flip over now, and we're going to look at a chart of the VIX. This is the volatility index for the implied volatility. And I want you to see how much it's gone up. This is big. Okay, so we've gone from, at the beginning of September, less than 20 on the VIX. Currently in the mid-30s, we peaked out at 35, and we should be much higher than that probably by the end of next week. Okay, now mid-30s is high. So that's high, but it's not as high as it will be. And I want to show you all year we've been hitting mid-30s for volatility. Okay. If this next wave that we're currently starting in the bear market, if this does not hit extreme volatility, you should probably see resistance coming in pretty soon, which means you'll be seeing support coming in because you're kind of hitting some of those high volatility points. I think it's going to keep surging. And what that will translate to, I got to rescale the chart here. Sorry, let's get this thing rescaled. Boom. What that will translate to in 2020, volatility reached a peak of 85. Wow. Let that one sink in. 85 is 3 times the volatility that you're experiencing right now. That's how much movement was happening in 2020. I do believe there's a good chance we will be there again before this bear market is done. So hang on to your hats. That could happen this week. We'll see. I'm not forecasting it will happen. I'm preparing you that it could happen. There's a much different outcome there. Understand that. I'm going to go back in time a little further, and I want to hit, you're going to see a few different volatility spikes that happened. 2016 was pretty volatile. We had a lot of volatility in 2011 and 12, but the big one was 2008. Here it is. Okay, I've got it on the chart now. We're going to zoom in on it. In 2008, implied volatility, or the volatility index, I should say, reached 98. That's what I believe is coming, folks. I'm not trying to scare you, because actually this is actually a huge opportunity for you, but I'm preparing you and I'm letting you know that the volatility is rising. This move in volatility that you see in 2008 happened 100% in September and October of 2008. It began the beginning of September, and by the end of October, we were through the peak. We had one more kind of double top, if you will, but we were through the peak by the end of October. All of that move happened in September and October of 2008. That's where I think we are right now. That's why I'm preparing you. That's why I'm doing this video right now. And here's the crazy thing. At the beginning of October, where were we? At the beginning of October, we were 44. 44 on the volatility index. Where are we right now? We're at 35. We're very, very close. We're kind of within about a week of this window of really right in line with 2008. It's just crazy. So I'm not saying any of this to scare you. I'm saying this to prepare you. I want you to be prepared for really big days where we have a lot of volatility. I'm going to show you. Actually, I'll do that now. Let me come back over here to the Dow Jones Industrial Average. And I want to put on the chart a indicator, one that I don't really use a lot. A lot of people do use it for a ton of stuff. Let me put this up here for you and share my screen so you can see it. It's called the average true range. And if you can see it on the bottom of my screen here, let me see if I can't make it just a little bit thicker for you. Why is that? No, there it is. There it is. There you can see it. This is called the average true range. It's the red line you see across the bottom of the screen. What this shows you is it shows you kind of an average of the extreme ranges of the trading sessions, okay? So it's showing you an average of the volatility, essentially. And you can see how it's on the rise, okay? Just at the beginning of September, average true range for the Dow Jones was only about 400. By the end of September, beginning of October, we're over 600. Okay, so that's a 50% increase in the average true range. Back in May and June, we had an average true range reading that was reading over 700 for the Dow. Okay, so that gives you an idea, just kind of a sense of how much volatility is happening right now. It's stepped up huge, and I believe it's going to step up even bigger. I've said it to my Profit Picks group. I will say it to you, and I'll continue to say it to anybody who wants to listen. I think we're going to see 2,000 and 3,000 point days coming up in the relatively near future during this bear market. That's 2,000 and 3,000 points in the Dow. You won't see that on the NASDAQ or the S&P, but you'll see it on the Dow. And then the other thing I wanted to show you is another chart. And this is VIXY, the VXIY. I just said that wrong. VIXY. Sorry, a little dyslexia kicking in there. VIXY. I'll write the ticker on the screen for you. I'm not saying you should trade this. I did not say that. What I'm saying is this is the ticker I'm looking at. Okay, now let me explain to you what VIXY is. VIXY is an exchange-traded fund. It's an ETF that trades the VIX, short-term VIX futures. So as volatility gets higher, VIXY will increase. And you can see that that has happened just back in May and June. VIXY was up here around 22. And currently, it's only around 17. But if you look at this, you're actually going to see a chart pattern. This is crazy. This is a legitimate potential trade setup for you. I'm not saying you should take it. But I'm saying that this is what we call a bull flag. It has broken out as of Thursday and Friday. So that is a confirmation of the trade. We're above the averages here, which I don't have on, but if I did have them on, they would look like that right there. And you would say, oh, yeah, that looks like an interesting trade setup. Your next targets for this would be maybe up in the $20 range, 22. This is an ETF. This is not VIX. This is an exchange traded fund. Just understand the difference here. But this is definitely one for you to consider. I've got several students that like trading VIXy. And since we're expecting for the VIX to go higher, this is definitely an ETF that you might consider trading. And then, of course, you can also trade VIX itself, options at least. You can trade options on the VIX. Can't trade the VIX, but you can trade the options on it. The only thing to understand about VIX options, if you happen to trade that, is they're European style. So if you know anything about options, then you should understand what I just said. If you don't understand what I just said, then you have no business trading VIX options because they're European style, a little bit more complicated. You shouldn't trade them. But if you do know what you're dealing with, then there's nothing wrong with it. I know several of you have several students that are probably watching this that trade SPX options, the index options, and Dow index options. So VIX index options, you could take some of the same strategies and you could apply it to VIX index options. Just be looking for a bullish move on that. All right. I think that's probably all I needed to say about volatility. I think I've kind of rung the bell. You guys have a pretty good idea of what is going on with that. Just be aware of it. Lots of volatility to come. I think October is going to exude all of that volatility. You will have opportunities. There's tons of opportunities. You just have to get positioned on the right side of that. You know volatility is going up. Trade accordingly. You know that there's going to be bigger ranges for your trades. Set stops accordingly. Give yourself room. And there's going to be a lot of money made over the next 6 to 8 weeks here. So I appreciate you guys watching this. Hope you've learned a lot. If you haven't subscribed, get yourself subscribed to this channel here on YouTube or if you haven't subscribed over my website, get yourself subscribed over there. And if you've missed the memo, I have just recently announced my new Market Maestro Accelerator. That's something that you're probably going to want to sign up for if you haven't signed up for it. It is a premium course, but it is a complete trading education, the biggest course that I've ever created at Trade Maestro, and I would love for you to join me. You can check it out. I'll put the links below in the video description, and you'll be able to find it on my website. Right now, we're doing some early bird promotional offers on it, so you can check that out, and you might want to save a little bit of money. The actual class will start first part of November, so you can join us for that. And I think you're really going to love it. If you like this kind of analysis and you're like, oh, wow, I wish I knew how to do that. Wish I knew what these candlesticks meant. Wish I knew what all this stuff meant. Well, you're probably going to want to take my Market Maestro Accelerator because that's the kind of stuff that I teach you. And I teach you all my trading techniques and all that stuff in that complete program. So go check that out. It's Market Maestro Accelerator. All right, back to this here. If you haven't subscribed to the channel, get yourself subscribed. Subscribe over at trademaestro.com to my mailing list. And I guess that's all I got for you today. So hope this has been helpful for you. Until next time, happy trading to all of you. We'll talk to you soon. Have a great weekend.